Right, folks. Good morning, good morning. Thank you all for attending, as always. Thank you to FX Street for hosting these sessions. And essentially what I want to try and talk through today is just a little bit of a kind of a non-standard skill set. And it's basically looking for history to repeat itself. Now, what I mean by that is, I suppose in one way you could term this as pattern recognition, but essentially I'm looking, the concept very simply is looking for history to repeat itself. Is the point on the right-hand side of the chart looking like any point in history? Obviously, the closer the better. The most recent point in history is the better, and that's giving me a flavour for the potential for history to repeat itself. Now, again, it's a highly discretionary and observational method, but I do find it very, very useful to go through this exercise to try and get a handle, to try and get a gauge on what price action might do next. Now, we never know 100% what price will or will not do. But what we can do is work on the assumption that history will repeat itself. Again, we know history does repeat itself in every avenue in nature, in life, in history. We know these things happen. And essentially, price action is a study of human behavior. And human behavior is a repeatable, reoccurring occurrence. So that's the aim. Does the point on the right of the chart look like any point in history on the left-hand side of the chart? That's the concept. It's a very loose description, but that is essentially the concept. And again, I do find it useful because it does help me to give a gauge on what I could potentially anticipate. And depending on how detailed that you go through this exercise, you might actually be able to get some timing issues, identify of when that next movement will ultimately unfold. So what I've got on the screen is the pound-yen daily chart. And again, most immediately, we're going to go through things, Jack. Yeah, we're going to go through a few different charts and examples. But let's just get the concept out of the way first and kind of show you what I mean. Again, I'm not looking to try and label a pattern name. I'm not looking for a head and shoulders. I'm not looking for a wolf wave. I'm not looking for a Gartley pattern. I'm just looking simply to say, well, it's kind of like a spot the difference approach. Is what is developing right now, or is what's developing right now, has that similar shape developed at any point in history? And you could literally look at the last 3 or 4 bars on the chart. It could involve the last several, the last 20. It could be a whole range of the chart looks, the last several months looks similar to a several month period in history. So it is a very loose description, and we can be as detailed or as involved as what we'd like. Ignore the arrows. These are just for my reference. In fairness, Mike, these arrows. Just as a little reminder, I've already been through this exercise with my own group of students, so I've had to remove all the analysis and put them, and just put some markers on for a reference for me. So don't worry about those for the moment. So, is what's developing right now looking like any point in the history? Well, let's look at this right now then. So right now we've got a move up. Again, look at the movements up. We've got a 3-day pause in price. Now we could call this a pullback. And is there any precedent for this shape of pattern in history? Again, most immediately we have a move up, a 2-day pause, and then another move up. So if we try and look at this point in history, compare what is developing right now, so literally just a few days ago in this particular instance, is the same shape unfolding? Well, for the moment, yes, it is. So what I'm trying to look at is, well, we have a nice movement up, a 2-day pause. Again, right now we have a nice move up, a 2-day pause. Now what happened next is on the live bar. So we need to look back at history to see what develops. And just where the cursor is there, we can see that we have seen a nice push up. So could we anticipate today to be a fairly reasonable movement? Assuming that history repeats itself, that could be a likely scenario. Now notice the wording. I can't say 100% that it will happen, but based on history repeating itself, it's the most likely thing to happen. So that is most immediate. Now let's look at some other points in history. Let's think about the last several days, the last several weeks, the last several days, and the last few, 10, 15, 20 days. And let's take a look at the whole range of movement. So is there any, is what's developing right now looking similar to any point in history? Well, let's take a look at the larger, the slightly bigger picture over the last several days. We've got that similar movements. Sorry, let me just change the shape. We've got that similar flow of movements at this point here. Can we all see that? Obviously, I've highlighted that. And comparing that to, this point here, we could also look at the bit before as well and try and compare the two. Now, I think that last one that I've just removed is not really looking similar. It's a little bit rough around the edges. Again, this is where the discretionary aspect comes into play. So is this movement up looking similar to a previous movement? Now let's take a look at, again, a similar poster chart where we've got, reasonable movements up here. Again, another very loose interpretation just here. We've got a nice, multi-stage movement. Move up, 1 day pause, move up, 3-day pause, and then we've got, again, another movement up, attempting to make a new high. So we've got a couple of different examples of the lead into this movement to try and compare what is happening right now to a point in history. Does this make sense? Does everyone understand the concept that I'm just trying to talk through? It's a very loose description. It's kind of individual. It depends on how you view the chart, but it is very simply, is what's developing right now, has that developed at any point in history? Don't worry about trying to label the pattern. Don't worry about trying to put a specific name on what a pattern might look like. It is simply a spot the difference exercise. Now, based on that, I can try and draw some assumptions as to what might happen next. We've already looked at the possibility that today could be, a fairly interesting movement. Just looking at the most recent history just a few days ago, but let's just take a look a little bit wider scope and see what happened next and compare what is developing right now and over the last several days and compare that to these 2 points in history. Do they look similar? Well, what we can see is that price on this first blued out square here made a move up. Again, we've got that pullback continuation type movement initially. Now obviously we've got the benefit of hindsight, so this is what we're trying to compare, the hindsight aspect. So looking at this portion of the chart where I've just put the vertical line on now, what can we see? Price attempted to make a new high, and we have a quasi-reversal bar, a dark cloud cover. That did then around and just paused for a few days with a slight downward bias before leading into the next movement. And that next movement was down. Let's take a look at this second historical reference. We've got, again, nice pullback continuation movements. And what do we have here? This next movement up, pullback 2-day correction, which is looking very similar to what we have here, 2-day pause. An attempted continuation to a new high. And then we've got this dark cloud cover once again. So is that history repeating itself? So let's take a look at the most recent price action and see if history is repeating itself. So what we have here is, again, we've got a multiple stage move, a little bit rough around the edges in fairness, but we've got the move up, pause, stroke correction, a move up, a pause, another move up, and then what do we see? We've got this dark cloud cover here, but that's also going into, we've not seen the immediate the immediate movement of price. We're seeing price just pause. So this price activity that's developing right now is looking quite similar to this first example. We've got the move up, attempting to make a new high, dark cloud cover, a pause for 1, 2, 3, 4 days before seeing the next move down. So if history repeats itself, and it repeats itself in the same way as this first historical reference, then we could be looking first of all at a pause for around about 4 days before seeing the next trending movement. So we've actually got a timing issue, assuming that history repeats itself. Now let's just compare it to the second historical example. We've got, again, the move up, dark cloud cover, the move up, dark cloud cover. Looking back at the historical reference, we've got an immediate movement down into a trending movement. Now that's not happened this time. So it'd be fair to say that this second historical reference that's marked, it's not shaping up similar to how price is developing right now. It's still a good example, but it's looking more like this first historical reference. Does that make sense? Does everyone understand the concept? Can everyone see what I'm talking about? Comparing what is developing right now with a historical reference. Right then, so based on that historical reference, we've got now a primary scenario. The likeliest thing to happen then, assuming that history repeats itself, is a replication of this first historical example that we've got marked off. That's my assumption. Again, notice the wording. I'm not saying it will happen. No one can predict that. But should history repeat itself, this is the most likely thing to happen, because price is looking and developing similar to how it's developed in the past. Assuming that history repeats itself, the most likely thing to happen then would be, again, let's compare the two. The most likely thing to happen is, again, we've got the dark cloud cover, we've already had that. 1, 2, 3, 4 pauses, 4, indecisive days from a direction point of view after that dark cloud cover. So we've got the dark cloud cover, we've got 1 day, 2 day, possibly 2 more days of indecisive direction before potentially seeing that next move down. And this is what I'm looking for. So it's looking like Tuesday or Wednesday next week, from a timing issue, assuming that history repeats itself before seeing the next more significant movement. Again, all on the assumption that history repeats itself. Now let's not discount the possibilities. That's the primary scenario. So let's not discount the possibility that price could go up. We've already touched on this. Looking at the most immediate price action. If history repeats itself, we've got these kind of, multiple stage movements. Move up, 2-day pause, move up, 2-day pause. So if today isn't a more interesting or more substantial trending day, and we see potentially a move up to around, perhaps 13600, then that most recent history is not going to develop. And then we could say, well, it's most likely then that the historical references several months ago will most likely transpire. So today we need to see a more significant trending movement for that most immediate history to repeat itself. If that doesn't happen today, then we're most likely going to be looking at Tuesday, Wednesday next week before before potentially expecting that next move. Just a comment from the room. You need huge, sorry, I can't read that word. Huge abilities to match these patterns. No, you don't. You're not. It's non-standard. It's not textbook pattern recognition. We can all play spot the difference. I'm sure we've all played those games in the back of magazines or puzzle books where you've got picture A and picture B, spot the difference. That's all we're doing, spot the difference. Again, Mike, it's price. Again, question is, can the concept apply to all time frames? Yes, it's just literally price action observation. You could apply this on a 60-minute chart. You could apply it on a 15-minute chart. We're doing this on the daily charts. But again, the concept is pretty much the same. It's just looking for his price action history to repeat itself. So assuming that price does repeat itself, then we're pretty much looking at this first reference being the most likely scenario if we don't see any move. So conditional, if we don't see a substantial movement today and the most immediate history repeating itself, then the most likely scenario after that would be to anticipate a potential pause in price. And again, what happened next? That's all I'm doing. What happened next? Well, what happened next was 4-day pause and a movement. So that's all I've done. I've just looked back in history and said, well, if we don't see a movement today, then this becomes the primary scenario. If history repeats itself, 4-day pause followed by a movement. We can all add 4 to today. We've already seen 2 pause days. So another 2 takes us to Tuesday. Wednesday would be anticipated from a time point of view when the next move could happen. Assuming that history repeats itself. It's nothing more complicated than that. It's spot the difference. We've got an uncompleted picture on the right-hand side of the chart in real time. So we could essentially anticipate the movements. Again, just spot the difference. Where are we where are we right now in reference to the historical reference? We've already had the dark cloud cover. We've already had 2 bars pause in real time. Dark cloud cover, 2 pause bars. We could anticipate, again, if we don't see a substantial movement today, then Tuesday, Wednesday next week when, from a time issue point of view, that we could anticipate the next movement. How did I come to that conclusion? Just look at history. That's giving you its indication. So that's it. That's the concept. History repeating itself. If history repeats itself, what could happen next? Let's just take a few examples so we can kind of see this in motion. Let's take a look at Euro yen. Again, a blank chart. Should history repeat itself, what might happen next? Again, what jumps off the chart at me is this most immediate pattern here of the last several days. That's what jumps off the chart at me. Now, has that repeated historically at any point in the time? If we want to just call this a general congestion, yes, we could call that a general sideways congestion. But let's just look at this. We've got kind of the opposite image here, where we've got that sideways price attempting new highs, attempting new lows. What's happening here? Prices, oscillating back and forth over several days. We've got that similar image at this point of the chart. Is there any other reference for us in history? Well, we've got a similar point here where we had several days of, again, sideways price activity. Again, notice the fact that it doesn't have to be an exact match. It's a very loose description of, history repeating itself. What have we got here? Well, probably we could define this more as a consolidation as first historical reference. The second historical reference, we could probably call that a wolf wave if we wanted. And this third historical reference looks probably more similar to, in an inverted nature, to this second and most immediate historical reference. Does everyone get this? It's just literally non-standard patterns. Does the point on the right-hand side of the chart look similar to any point in history? And if it does, Can I draw some conclusions from what happened next? Again, Avalo, is that head and shoulders pattern? Who cares? It doesn't matter what it's called. It doesn't matter. That's the point. We're not trying to label these patterns. I know I've called out some names, but it doesn't matter what it's called. Does the point on the right look like any point on the left? Spot the difference. And if you don't see anything, it doesn't matter. If you don't see it, don't worry about it. Don't force the issue. But these are 3 points on the chart that kind of jump out at me. The most immediate price activity looks like it did just before the end of last year. Yeah, I mean, it absolutely, Mike. Yeah, an interesting point. The concept does take you beyond the textbook patterns. I stopped worrying about what patterns were in a textbook a long time ago. Don't worry about what the name of something is, because we never know truly what the name of a more standard recognizable textbook pattern is until after it's completed. No one knows what the name of a pattern will be until after it's completed. The textbooks are full of, textbook examples. They're always after the fact. And trying to train yourself to identify them in real time can be a real headache. Basically because in real time, the pattern that you're trying to identify is constantly evolving, constantly changing. It could look like one pattern one day. You could name it another pattern another day. I would say, best advice, don't worry about trying to put a name on patterns. So we're literally talking about hundreds, if not thousands of possibilities of differently named, of different patterns. But we don't have to worry about trying to label them, categorize them, put a name to them. It's just simply looking for history to repeat itself. Is the bit on the right looking similar to the bit on the left? That's it. It's a very loose description. I don't have to worry about trying to label the pattern. So most immediately we can see, to be fair, we've got two kind of examples of price oscillating back and forth. The most immediate pattern looks the most similar. Again, it's inverted. It's just the opposite to what happened over here. Now, what happened previously? So now, what I've done is I've identified some points. Now, what I'm marking off now, just with some vertical lines, is where the patterns start to move. So I've marked off in real time where we are now. I've marked off the point where price led out of that pattern in a substantial nature. The first pattern, again, I've marked off where price led out of the pattern in a substantial nature. So now I'm trying to figure out and make an assumption of what might happen next. Now, as this second historical reference is looking most similar to the real-time reference, again, it's inverted in nature. What might happen next? Again, Gina, we've got what's the success rate? It depends on a certain pair was the question. We're not trying to, what we're trying to do here is try and gauge what might happen next. We're not trying to trade these patterns. Basically, we're looking at trying to figure out what might happen next. When you've got that assessment, deploy your strategy. Whatever your strategy is, bolt this on to the beginning of your technical analysis, your assessment of, do I have a trade? So, for example, if we're looking at price leading out of this pattern in a more substantial nature, what led into the movement out of the pattern? Well, we've got, in fairness, we've got a little bit of a, hammer bar formation there, and here we've got quasi spinning top, in fairness, hammer bar formation, a little bit vague on that. But we do have, again, that stereotypical reversal bar that led out of the pattern. Now, what do we have here? Do we have any reference for that in real time? do we have any type of reversal bar? So we know that reversal bars, like hammers, like dojis, like spinning tops from a candlestick pattern point of view, that led into the move out and a more substantial move away from this pattern. What do we have here? Yesterday, dark cloud cover developed. Now, dark cloud cover is a bearish. Now, as we're looking at kind of an inverted pattern, comparing this most immediate pattern with this last one that's highlighted, the last historical reference, it kind of inverted in nature. What happened last time was reversal bar, a more substantial 4-day movement out, bullish. Now, as it's an inverted pattern, we could say that now we've got the reversal bar indication, we could well be looking at a 4-5-day movement from today, Monday, Tuesday, Wednesday. So potentially looking at a good trending move starting today, going into the middle of next week. Euro, did I take these trades? Currently I'm short on Euro Yen Bill, so I've deployed my strategy already on lower time frames, and I'm already short on Euro Yen. So yeah. And this can be basically used as a bolt-on tool to whatever your strategy is. Again, I'm not going to, I do try and avoid going through specific strategies, because we're all different traders, we've all got different time frame horizons, we've all got different entry methods, but we can have a good indication of what might happen next from a timing point of view, how long that move might last, and can we profit from it? So historically, looking at this most immediate pattern, let's do a little bit of extra research. The move's already started. Personally, I'm already short. I got short yesterday from 113.30. It's not really too far away from my entry at the moment. But what could I anticipate from this movement? Now let's just take a rough gauge of how much that move developed. All I've done is I've drawn a square box on there. I'm just going to drag that across just to give me a visual reference. I'm looking potentially at a move down to 110. Nothing complicated, very rough around the edges, but it gives me an approximate expectation. So there's about a 3.5 cent move potentially available, assuming that history repeats itself. It's, again, look at the patterns. It's already starting to repeat itself. Can we all see that? Does this all make sense? Again, very simple concept. Spot the difference. Is the price action that's developing right now, do we have any point in history that looks similar? That's it. It's not pattern recognition. We're not looking for textbook patterns. This could be literally a pattern, for want of a better word. It could be a portion of the chart that has repeated 2 or 3 times in the last several months. It might never repeat itself again. I think back to around about 2004, 2005, when it was pretty much exclusively trading the pound dollar. And on the 15-minute charts, it was back at a time when it was a bit more of a discretionary trader. I was using 1 or 2 indicators at the time. And what I observed was that there was a MACD divergence, a 3-peak rising price action, descending divergence, and descending indicator. So rising price, descending MACD, to give me a divergence on a 15-minute chart. Now what I observed was that, again, typically divergence in price, you would expect price to sell off. That's the common conception of a divergence in price to indicator. But what I observed was that price moved around about an average day's move, around about, at the time it was around about 120, 130 pips. So it pretty much done an average day's move. In the latter portion of that move, it developed a bearish 15-minute divergence. Now what I observed was that when that pattern developed, it led into a further 100-point movement. Whatever price had done previously, it basically doubles the movement. Now the common conception with a divergence with price to indicator is price is going to go in the opposite direction. But the observation was that, hold on, this is a short-term pattern. And I had to completely change my view on what I was going to do. Because history is telling me something different to the common conception. And that conception is a reversal in price, whereas the reality, it led into an explosive movement. Now that lasted for 3 months. I have never seen it again. And that was back in 2004, going into 2005. It lasted for about 3-4 months. It was a very, very short-term pattern. Guess what? Based on observation. The common conception of a divergence in price to indicator was wrong. What was actually happening was that that indication led into basically a double up on the move. Whatever price had done previously, say it was 100 pips, it could be 75, but whatever it had done previously, price would pretty much do exactly the same again. Think outside the box. It was a short-term pattern outside of the concept of what all the textbooks said, but it led to a bloody good profitable move. History repeating itself in a short-term nature. That's all we're trying to achieve. That's all we're trying to do. So let's look at a few other things. Let's look at some of the majors by request. Sorry, the question from Bill. I've got a lot of subscribers on my website. I restrict the numbers. I'm not one of these people that pile it high. I like to try and give everyone individually the support that is required for them. So I do restrict the numbers. Anyway, that aside, just to answer your question. So, history repeating itself. Can we see history repeating itself? What do we see? Just say what you see. Rough terms. We've got a cluster of price activity. We've literally got daily bars, up bar, down bar, up bar, down bar. This period of chart is kind of like a cluster. We could call it, a move up, pull back, retracement, potentially leading into the next movement. We could call it on the lower time frames a descending channel. We could call it a bull flag. Personally, who cares what it's called? Does this part of the chart look similar to any point in history? Cluster of price activity. So that's the definition of the pattern we're looking at right now. Cluster of price activity. Cluster of price activity. We've got a cluster of price activity there. We've actually got quite a few examples on the pounds of clustering price activity. Quite a few examples. So what I'm looking at is what happened next. So look at the historical references. What happened next? Where did the next move occur? Okay, so look at what happened next. Look at history. What happened next? I'm just trying to polish this up a little bit. So what happened next? Cluster of price, start off. Cluster of price activity. A little bit of candlestick pattern recognition. Dark cloud cover. Bearish indication. Again, Bill, it doesn't... Dark cloud cover. We've got that there. So there's your trigger. There's the bar, the daily bar that led into the next move. Deploy your strategy. If your strategy is a 60-minute Bollinger Band reversal, deploy your strategy. You're looking for a short. If you're looking for a moving average crossover setup, deploy your strategy on it. You say you're looking for a moving average crossover. Deploy your strategy. Drop down to whatever time frame it is. It could be a 15-minute moving average crossover. You're looking for a moving average crossover on a 15-minute chart. You're looking for a short. Deploy whatever your strategy is. If you're looking for an Asian session range breakout, there's your lead into the movement. How's that developed most recently? Yes, we've got a little bit of a reversal bar. Engulfing bar, all right, it's a bearish indication in fairness. Bearish engulfing bar, slightly bearish bias. But if your strategy is to look for a breakout, deploy your breakout strategy. Look for price to break out of the Asian session range. If you're looking at a Bollinger Band reversal, look for a Bollinger Band reversal. If you're looking for a fib retracement setup, look for a fib retracement setup. If you're looking for a 5-minute Gartley pattern, look for a bullish a bullish 5-minute Gartley pattern. Whatever your strategy is, deploy it. This is a bolt-on technique to give you an indication of when you can take action. You're not trying to trade these patterns, you're looking for an indication of when something will happen. When you've got that indication, deploy your strategy. If it's on a 4-hour chart, look for a 4-hour, if you're looking for 4-hour pin bar reversals, look for a reversal bar on a 4-hour chart. Deploy your strategy. For your analysis assesses that, we've got a bearish reversal bar there, we've got reversal bar here, piercing white line leading into the next movement. What have we got here? All right, not quite the same illustration, but we've got a bullish engulfing bar that led out of the next movement. What have we got here? We've got, again, price starting to move out of this pattern. Deploy your strategy. It's moving out of this pattern in a bullish nature. Look for longs. Simple as that. Drop down to whatever your entry time frame is. Deploy your strategy. That's what I'm trying to say. This is a bolt-on analysis method using non-standard technical analysis to try and give you an indication of what might happen next. So what might happen next? Let's take a look. We've got, a fairly reasonable move down there historically from 58 down to around 53. So potentially a 5-cent movement from that reversal bar there. Move up there. What happened there from 56 to 61? Potentially a 5-cent movement. Again, historically, the bullish engulfing bar there, so let's measure it from there. Only a 3-day movement before we see the next cluster. So we've got from around about 160 up to 62.5. So anywhere from a 2.5 to a 5-cent movement is what you can anticipate to happen next. Where's that going to take you? From the current levels, 162, anywhere from a target upwards of 164.50 up to 167.00. That's what you're looking for. That's it. It gives you an expectation of what might happen next. Nothing more than that. Whatever your strategy is, deploy your strategy. So let's just come back to some of the questions. So, can you show us how to enter on these clusters? I think I've already dealt with that. We're not trying to trade the clusters. We're trying to get a gauge on what might happen next. What might happen next is as price moves out of this cluster is anywhere from 2.5 to a 5-cent movement. That's the expectation. Price is moving bullishly out of this pattern for the moment. You can anticipate, assuming that history repeats itself and everything's looking the same and similar as it, then you're looking at a bullish movement anywhere between 2.5 and 5 cents. That's what you're looking for. So do take fundamentals into account. Personally, Andre, I'm not interested in fundamentals. I've got no interest in it whatsoever. It's a little bit lazy of me. At the same time, I do fully appreciate that fundamentals do play a key part in currency analysis. I personally don't do it. I think that the fundamentals are already factored into the charts, particularly over the last 4 to 5 years. Price doesn't react to the news in the same way that it did 6, 7, 8 years ago. Non-farm payrolls is a good example of that, where non-farm payrolls, regardless of what the announcement was, you could expect an average movement on something like the pound dollar of around about 300 to 400 pips. A knee-jerk reaction post-news of around about 100 pip gap, that would be very commonplace. Absolutely, Gene, the good old days. And that's changed. Non-farm payrolls over the last several years, you're lucky if you see a 20 to 30 pip knee-jerk wobble in price, and then there's no follow-through movement. You just don't see the same reaction to news. I'm personally not concerned about news. So come back to the questions then. Fundamental, I'm not personally bothered about it. I'm not really concerned. I've got no problem trading through news. I've been scared off too many trades over the years, worrying about what the news might occur. Deploy the strategy. If it tells me to go short, I'm going to short. If it tells me to go long, I'm going to go long. The news, 7, 8 times out of 10, usually contributes towards the direction that you're looking to trade in, assuming that you've got a good strategy in the first place. So on that side again, coming back to questions on the first two strategies to go short in the circle. So now what we're looking at is first two circles. The strategy would have got you long or short entries and exits a problem. Again, this all really comes down to your strategy. You need an entry and exit strategy build. Again, I'm not covering that. I'm covering basically a bolt-on exercise to your strategy as opposed to going through a strategy. So the lead into, just going back to the chart for a moment, we've got cluster of price activities, reversal bar leading, in this case, dark cloud cover, leading into the next movement. This cluster here, we've got a piercing line, the opposite to a dark cloud cover, leading into the next movement. We've got a cluster of price here, bullish engulfing bar, leading into the next movement. A little bit of a question mark on this one, if I'm going to be honest. We've got an engulfing bar, but it's got a bearish bias, just closed lower than it opened. However, price on that engulfing bar closed above the halfway mark. So you could also interpret that as a bullish engulfing bar, even though it closed lower than it opened. Give that a bit of thought, folks. Give that a bit of thought. So, reversal bars. Dark cloud cover, piercing line, engulfing bars, shooting stars, hammers, dojis, all leading into the moves out of these clusters that we've marked on. We've got our engulfing bar, price is going above the high of that engulfing bar. Bullish indication. Deploy your strategy, drop down to your lower time frames. However you would typically and normally enter into price activity. It would get you into the trade. So do I wait for the close? Yeah, I mean, in fairness, One Empire. Do I wait for the close of the engulfing daily bar? Yeah, in this case, we're on a daily bar. You would always wait for the completed bar to give you the indication. So if you're on the daily chart, you're waiting for the daily chart to complete. If you're on a 60-minute chart doing this exercise, you would wait for the 60-minute chart to complete. And obviously a 4-hour chart, you would wait for 4. You will always want to deal with completed bars. Never try to guess what the live bar will do. It will change, it will mutate and turn into something else. So always try and deal with completed bars when looking at trying to make these type of assessments, because you want the most recent and completed information to make your assessments. MB, my strategy is pretty mechanical. Yes, it is. Can it be coded? It's not coded. I don't believe that. I'm not fully convinced that while you can have a mechanical system, a mechanically assessed system, I'm not convinced that it can be programmed. Price action, I've spent many thousands of dollars trying to find a programmer that could code price action, and they've all come back to me and said they can't do it. I've kind of given up on it, in fairness. I do believe that programming strategies do work. They would be more algorithmic in nature. I've spoken to several programs that are very successful with algorithmic style trading. I don't fully believe there's a coder out there with sufficient skill to program price action. Just from my own experience, if there's one out there, that's great. I've not found it. So my strategy, it's all manual, but it's mechanical in nature with its assessment. I've tried to break my strategies down into kind of yes/no answers. You either, do you have an opportunity? It's either going to be yes or no, and then move on to the next assessment. Does this meet the condition? Yes or no. Does that meet the condition? Yes or no. So that's how I approach my trading. Again, we're kind of going off topic. We're kind of running out of time, so I don't really mind the off topic. To be fair, folks, that's really the concept that I wanted to bring across to you today. Is the current price action developing to any point in history? If it is, what can I expect to happen next? That's what I'm trying to. So what you're doing is saying, well, this looks like it is developing like several points in this past. What happened after those several points past? What led into the next movement? And can I anticipate that to happen next? If so, I can deploy my strategy and have an expectation of movement. And as we just went through on the pound dollar, anywhere from 2.5 to 5 cents would be your expectation of movement as price moves away from this cluster. So just coming back to some of the questions. So again, another question on coding. Have I tried to code this concept? Some aspects I have. I'm not a coder. I don't know how to write code. I wouldn't know where to start, to be honest. I think I'm too long in the tooth to try and learn a new language. Again, I've spent over several years. I've spent many thousands of dollars just trying to find a programmer that will code price action, just pure price action with no indicators. It's very difficult to find a good enough programmer. They've all told me they can do it, taking a check for a few $1,000s and then go, no, I can't do it. So it's been a bit of a wasted exercise. I should imagine it can be done with sufficient skill. I've never found one, to be honest. Never found one. Fernando, yeah, I appreciate the comments. The skill is yours or the individual's. Many people can code. A lot of people won't touch price action coding. It's too involved. It doesn't matter how much money I've thrown at them, they won't do it. It's a multiple month project. It's not something they can knock out very quickly with a quick few lines of code. I've spent a lot of money on trying to get things coded with just pure price action. It is very difficult to find someone who's prepared to take such a lengthy project on. It doesn't matter how big a check you write for them, they've all come back to me and said no. Got halfway through the project and go, no, it's too much effort. So that's really what it comes down to. If you can do it, that's fine. Personally, I've had the experience where a lot of things with price action can't be coded. I don't fully believe it can be 100% mechanical in nature, any type of strategy. Most things, as I mentioned, I would lean towards algorithmic style trading that could quite easily be programmed. Again, I'm pretty much done. I've got the concept I want, so I'm happy to take questions and answers. If the FX Street team are happy with me just to have a little bit of an open session at the end. I'm not sure if there's another presenter coming on next. But again, this is the concept that I want to go. I'm quite happy to just do some questions and answers, whatever you want to ask, basically. Is this recorded? Yes, it is. I believe it will be in the archive section at some point. I'm sure the FX Street team will let you know when that's uploaded. How much time did I devote to backtesting my strategy? Many months. Went back over several years to try and get a gauge on whether it was going to have long-term viability. Then I spent a period of time forward testing it in real time to make sure that it did actually have viability. The minimum amount of time to assess a strategy for further research would be 12 to 6 months. If it's looking good over a 12 to 6 month period, I will then invest more time, go back over a 2-year period, then a 5-year period. But ultimately, I'm aiming to have a 5-year historical reference to see, how many conditions, different types of market conditions can this strategy trade through? Will it weather most storms is what I'm trying to look for. So at least 6 months to make an initial assessment of, is it worth investing more time in? If the answer is yes, again, they're always trying to come up with a yes or no answer, then do 12 months, 2 years. If it's still got viability, then I'm looking at a 5-year period. And if I'm honest, I've only done it a few times in Dennis, but if I can be bothered, I will go back and do it through a 10-year period. The way that I research things is all manual, so it's very labor intensive. I don't code anything. Again, I'm not a coder, I don't know how to do it. So everything I do is manually done. So it's very time consuming with the way that I do it, just because of my skill set doesn't allow me to program anything to try and automate some aspects of that research and development. Fernando, again, this particular concept, I appreciate it, it's very ambiguous, it's very discretionary, it will vary greatly between the individuals. The question was, the key to this is that when you see a chart, you come to the conclusions and base of bias, but a lot of ambiguity. So this particular concept, yes, you couldn't code this. It would be impossible to code this. It is 100% discretionary. It will change and vary with the individual. So it is a discretionary approach, but it's a very useful tool to have in your arsenal to make an assessment of, we've got a recognizable pattern, a recognizable portion of the chart that is repeating historical reference. All right, well, I've now identified that. So how can I take advantage of that assessment? What happened next historically, and can I apply that to the real-time part of the chart? It's a very discretionary approach, this, and again, it's more of a bolt-on to an existing an existing strategy. You wouldn't trade this on its own in isolation, and it would be a complement to whatever your trading method is. And on Euroyen, where and why did I place my stop? To be fair, it's proprietary. It's not for general consumption, if I'm going to be honest. I've already been through this in the past, so I'm not prepared to give details of the exact strategy in a general form. So you will forgive me if I don't go through that. It is proprietary. People pay me for my time to explain it to them. In fairness, it wouldn't be fair for them if it's the general release. So my apologies, but I'm not going to answer that question. So do I expect a 2 to 5 cent movement? So do I expect a 2 to 5 cent movement on the pound dollar? Yes, I do. I expect a 2.5 to 5 cent movement. That's what we've just been through. What time frames are my favourite to trade? Again, it doesn't matter, Rob. The time frame doesn't matter. My favourite time frame doesn't matter. The real question is, what time frame are you comfortable trading? If I was to tell you a 1 minute time frame is the best time frame to trade, but you don't like a 1 minute time frame, what's the point? If your preference is a little bit more relaxed for intraday trading and you prefer a 60-minute chart, trade a 60-minute chart. So, what time frame is my favorite? My favorite doesn't matter. What's your favorite? What's your personal preference? That's really what it comes down to. Personal preference. What do you prefer to do? If you don't like trading a 1 minute chart, don't trade it. Trade what your preference is. Andre, Euroyen would be around 120. Let's just go back to it. So yeah, we're looking at around about a 3 to 4 cent movement. I'm aiming to around about 110, 109.50 would be my anticipated expectation of movement. So around about a 3.5 cent movement. That would be my expectation on Euroyen based on what we've just been through. Mike, believe someone will code this under my guide. Yeah, someone probably has done. I know of 3 people who have ripped off my site. One guy actually cloned my site and tried to resell everything under his own branding. I've got him shut down twice now. But it does happen. There will be people that try to do things and sell it for their own. Right, folks. I think that's me done. I've run over slightly. I've got all my bits and bobs all done with. A little bit of a question and answer session at the end. Kind of general, but again, just to come back to the concept is spot the difference. Is what is developing right now, what's developing right now looking like any point in history? If it is, based on the historical reference, what could I expect? If possible, when could I expect that to happen? What could I expect as a movement away from that pattern? And what might lead into that next movement? As we've identified in the examples that we've just been through, quite commonly it was piercing line, dark cloud cover, your stereotypical reversal bars that led into the next movement. And again, as the example on Euroyen, we've got dark cloud cover, just kind of indicating a potential inverse relationship to this previous pattern. And I'm anticipating around about a 3 cent movement out of this pattern. That's it. Very simple concept. Spot the difference. It has been recorded, so you can watch it again at your own leisure. If you have any follow-up questions, please feel free to contact me through my site. But other than that, folks, thank you very much for your interaction. Thank you very much for listening. My name's Philip Newton. You've been fantastic, and I will see you all next time.